Maximus Analysis here for April 4th, 2016, and on the ES Daily, which we're looking at right now, we want to basically hold this 220 to 214 area. I believe 220.25 is last week's low, so we want to see if they're going to hold last week's low is actually 219.25, excuse me. So we want to hold this 220 to 214 area. We've been staying in the 214 area for a little while, 203, 214. Again, they need to hold that because we continue to have, and the reason why I bring this up is because you have to have the flexibility of what happens if we go up, what happens if we go down, what happens if we stay sideways. So giving you the flexibility to prepare yourself for either side actually makes things a lot easier in regards to trading, saying, all right, if I'm bullish, it breaks this level, I'm not going to just buy the dip without, clearly seeing something else to make me do that versus just seeing a red bar, which a lot of people do. So on the weekly time frame, we see that we continue to have lower highs in place. We are definitely moving with some type of speed, but again, we want to hold this 2019-25 area on the ES to not see them come basically close to these 1935 areas. And if they get to that with these three lower highs, unless they give a strong pivot and blast through, that could be kind of dangerous. So again, just make sure you're looking at the aggressive time frames to get in and out, because we're not getting a lot of follow through sometimes when it's coming to this. So again, we want to hold these highs, but again, you're having days like this cleans out all the longs and all the shorts, and then gets longs, and now the people are long. So let's just continue to watch and see how things go. NQ, we want to look at, again, top side, or where we are right now. Big resistance area is this 45.23 area we're currently in, but a pullback to 43.89 would be, that's where I would say, okay, let's really watch where things are. But the bulls are in control until then, and we can't say anything else besides that. Again, on the weekly time frame for the NQ, you can see we have not broken a low of a week yet. So when we get that, we have to see what happens and how the markets react. So the YM, which is the Dow futures, is pretty much the same thing we've been talking about for a while, holding this 17,250 area and of course the 17,000 area. Crude on the daily time frame, again, is continuing. Now we really want to see them hold this 35 area. They are close to 35.61, and we want to watch the dates of April 6th to 7th. So we want to see if they're going to hold these highs here. You could just put something right here at the top of these. Are they going to hold these and continue to rip to the upside to potentially go for this 200-day moving average, or are they going to slice through it? Again, we are a lot of days down, so let's see if they're going to hold this area. Let's look at some equity names quickly. So we're going to start with Amazon on the daily. And Amazon is just an annoying pattern that you didn't get the follow through to see this flag, but you are above this previous pivot for the time being. So this little pivot area is still giving you some level of support. Again, remember we talked about when they were going up that we wanted to see what happened at 588.56, where we're above that. We had our target potentially at 600 to 602. You can go back to the videos, you'll see them. And right now we want them to hold that area that we said if they push through, it could push to that that target area of 600 to 602. So let's continue to watch that. Google on the daily time frame, we can see again it still has a nice it's holding these lows. Again, let's say 748, 748 and a half would bring it right around here. Let's just put another one right here, and you can see that this is the level that needs to hold on any type of pullbacks. Staying above this 749.91 would be something to also be aware of, and that puts us around here. So let's continue to look around here and make sure that this pivot continues to hold to the upside. Continuing with Netflix on the daily, we can see that we are testing the 200-day moving average right now, and we want to see them stay above this 105.68 level. I think they closed right below it, a little bit below it today. So that would be some level of resistance. And again, if they break above that, we're looking at 108.27 to watch. Also watch April 8th for this to see if there's any type of turns or anything like that on that date. Let's look at the weekly time frame for this Netflix to just see what we got going on. Again, we want them to hold all of this basing pattern right here, because if they don't, and if they get back into this 100 level, that's a false break reversal. So we don't want that to happen. Right now, this is a bullish looking candle setup for the time being, but if they break back below this 100, that would be caution. At least would be a little bit cautious in regard to the bull side. And last but not least, we will talk about Tesla on the daily, and it continued to rocket up. Just gap up, another gap up after that. So let's look at potentially 2048.67 as our top side. Okay, that would be some level of resistance. And of course, we want them to stay above this 225 area. That would bring them around the 200-day moving average. And of course, the 215 area, which we talked about, was 2 weeks ago low. And then they break 2 weeks back low, then that'll be something to say, all right, now it's time to look to the bear side. And that would be based on the weekly time frame. This is Tesla weekly. If they gapped up and then came all the way back to test 215, that's here. That's a hell of a bar. So we just got to continue to see how they're going to be moving on this one. So again, we'll continue to look at them, look at the markets, again, being flexible, using the higher time frames as some type of direction, using the low time frames like a daily to get us in, and an aggressive time frame to really manage our positions. Okay, so we know the trend on the daily is bull side. Intraday, you're going to have to, again, because you have the luxury of having a smaller stop, you're going to have to be a little bit more precise in regards to where you get in and get out. You don't want to just blindly say, okay, this is a dip, because we see that we're having some pretty significant moves like here, but being that we have on the weekly, we have these lower highs, there's just something to be cautious of. But you have levels, again, on the ES, like a 220, 214, that at least you could say, okay, I'm not going to be bearish until they break that number. And I adjust those numbers based on some mathematical stuff that I do over on this side as the price action moves up. And we've been calling, saying, not calling things out, but basically stating those numbers day by day to make sure that you are able to participate in the move up. So I hope they help, and take care.